All right. Hello, everyone. My name is Mark Hodge, head coach at Rockwell Trading, and I am here sitting in for Marcus. So it will be coffee with Mark today. And there we go. Before we get too far ahead of ourselves, can you hear me? For anybody checking out the stock market update this morning, I had a hard time with my microphone. I just want to make sure that, yes, you could hear me before we go too far into this. Yes, yes. Okay. Wonderful. Wonderful. Gosh. And then I'll do my best to make sure that I'm sharing my screen as well. So good, good. Gosh, I've done this enough. You'd think that I'd have the mic part down and also the screen share down, but this morning was not my morning. Anyway, it's been a good afternoon, so we'll end it on a positive note. And I'm happy to be here with everybody. Thanks for joining. Let's go ahead and just change this view. There we go. Welcome to Coffee with Mark. And let's take a look at what we're going to do today. We're first going to start off by taking a look at the market, see what took place today. I'm then going to share my 10-step wheel trading checklist. So I've had a few people ask me for a checklist, and I thought that it would be a great time to share this. So we're going to focus a little bit on the wheel strategy in my checklist for finding good opportunities to trade. And then we will review my position. So I'll let you know the trades that I'm currently in. And last but not least, we'll tackle a couple of questions. So this is what we will be focusing on for right now. What I want to do is I want to stop sharing that screen, and I'm going through the process to make sure I do it right this time. I am going to share this screen. There we go. So far, 2 for 2. The audio is going great. The screen share is going great. Okay, I got this. All right. Well, if you were following along today, it's been an interesting trading day. I'm bringing up the S&P, and we're looking at a daily chart here. So we opened higher, kind of, went sideways a little bit, and then there was a pretty decent sell-off here. So during lunch, the S&P sold off, got a little bit of a bounce. With about a half hour to go before the close, we're going sideways here, off of the session lows, well off of the session lows. So that's a positive, but it just looks like it's going to be one of those Septembers where, yes, Septembers are not always bad, but they have a tendency to underperform. And that is the case for this September. So with the month wrapping up, we could take a look at a monthly chart. We'll go here. We see that the S&P right now almost down 4% for the month. If we take a look at the Dow is down almost 3.5%. If you look at the Nasdaq's down about 5%. So pretty ugly September for some people. But this is where I think there were a lot of nice wheel trades, and that's why I wanted to share my trades, but also my 10-step checklist. So it was it was a great month for collecting premium. So we'll talk about that. But this is what's going on. It's also the end of the quarter here, and it looks like with the drop, Nasdaq's going to be on the fence on if it finishes positive or not, I believe. But the Dow looks like it's going to finish the quarter negative, and the S&P, although a nasty September, looks like a positive quarter, and that's putting the S&P in a 6-quarter win streak, which is the longest since 2017 when the S&P finished with 9 consecutive winning quarters. So let's talk about this. So investors are still keeping an eye on Washington. The Senate, they passed a bill that would fund the government through early December. We knew this morning that a deal had been made, but the Senate officially passed it. The deal still needs to pass in the House, but that's expected to happen. That debt limit ceiling, that's still going to be an issue. So they had no resolution there. That will be a concern or something to be aware of until October 18th. Fed Chair Jerome Powell and Treasury Secretary Janet Yellen were testifying before the House Financial Services Committee this morning. And Yellen, she did reiterate her call for Congress to raise the debt ceiling. She said that the failure not to do that would be catastrophic. So that's something. Yeah, I talked a little bit about the government and its impact on markets, at least day to day, in this morning's stock market update. Generally speaking, yes, Washington can have an impact on the markets. I'm not saying that, but the markets will pay a lot more attention to the Fed, monetary policy, other things, earnings, that sort of thing. So it's not like we're out of the woods or it's something to be totally concerned with, but it's something to be aware of as a trader. Now, one thing that really just kind of snowballed into a bigger deal this morning, and that was this drop in Bed Bath and Beyond. So Bed Bath and Beyond here, earnings, missing earnings, and a huge earnings miss, with them saying that consumers are spending more time at home, and they saw a big drop in traffic in August, which isn't good for retailers. The company highlighted supply chain issues, which we know have continued to be a concern, and those supply chain issues lasting longer than many people expected. But higher costs are really picking up at an alarming rate. That's a concern for this quarter, also carrying over into the next quarter. So I think that's part of the concern here. And there, this kind of carried over into other retailers as well, like Bed Bath and Beyond. I mean, they've been having a rough time for a while. If we look at the bigger picture here, yeah, we got a bit of a bounce because of the pandemic. Go figure. But they were kind of in a downward spiral for a while. But nonetheless, that lower retail traffic, higher costs, supply chain issues, those are all things that could affect any retailer. And it seems like that did carry over into some other names. Bed Bath & Beyond has huge exposure in Texas, Florida, and California, especially with the Delta variant being high in that bigger exposure in Texas and Florida. Yeah, that's something to think about with other retailers as well. JWN down 8.24% today. We look at Kohl's down 11% today. If we look at Macy's down 8%. So it just kind of snowballed into bigger concerns. Well, we'll see if it's a bit of an overreaction, but today there's no ifs, ands, and buts about it. Retailers are taking some heat. So let's do this. That's what's going on right now. Dow's taking the biggest hit today as we approach the close. S&P down about 0.5%. Like I said, we're going to finish the month negative for sure. Week looks negative as well. Quarter S&P should finish higher. Now, let's do this. I want to jump to my 10 steps checklist, my 10-step checklist for wheel trades. And then I'm going to share the trades that I'm in. So let's go ahead, and I am going to bring this up once again. And let's do this. Let's do this. There we go. All right. So 10 steps, my 10-step checklist for wheel trades. The first step is, do I want to own the stock? This is where I see traders get stuck all of the time. They are drawn to the premium collection. Once you learn the strategy and you understand that the first step is selling puts, right? Then the first step is selling puts. Someone gets drawn to that premium and they forget about what happens when you sell the put. And when you sell a put, you have an obligation to buy shares at the strike that you've sold. So that means that you should be willing to buy shares at that strike that you've sold. So there's two parts here. One, do you want to own the stock? And two, do you want to own the stock at the price that the strike price is that you are selling? And sometimes the judgment can get clouded a little bit with blooming premium. And that premium is just one part of the decision-making process. So don't get caught up in this high premium if it's not a stock that you want to own, because I guarantee you that that premium collection can work very nicely for a while. But when it doesn't work, when you get a sign and there's a little bit of a drop, you really want to make sure that that's a stock that you want in your portfolio. And if you're trying to bail when the stock's trading around the strike price, that's the worst time to do that. So make sure going into the trade, is it a stock that you want to own? If yes, I'm happy to proceed to the next step. If maybe, then I will continue with my analysis. If it's no, if it's not a stock that I want to own, I'm moving on to better trades. So I'm not going to trade a stock with the wheel strategy just because of its good premium or because the strike price seems so low that it's impossible that the stock will drop there. Trust me, if there's option premium at these low strikes, that's for a reason. Option traders, they're pricing options, they're buying and selling options based on the expected move. And so if options are high, and if you could sell strikes so far below the market, it's not because there are a bunch of dummy options traders. It's because option traders in particular, they're expecting a big move. So you're the dummy if you're selling that premium without figuring out if it's a stock you want to own and a strike that you want to own it at. So continuing with the analysis, a few things to consider. Do more research, right? I like to trade stocks that I am familiar with, and so having a history in the market and being, a trader for decades, really, I kind of have a feel for the stocks that I want to trade. But there are new stocks or stocks that pop up that I need to take a closer look at. What do they do? Like, what's the story, right? Is it a stock that's rallied just because of some craziness and some speculation, like a Reddit stock? Or is it a solid company that has been around for a while that's doing well? I mean, this is that growth versus, income stocks, or, quality, rather than just focusing on crazy growth stocks. So, I mean, that's where you have to do a little more research, find out what the company does. And also, Chip doesn't like this company. All right. So, as you probably have just learned, my dog Chip is my trading partner, and he's quiet for 90% of the time when he's in my office and we're trading. But every now and then he gets excited when someone's out front. Anyway, so research the company. Does it have any news coming out, right? Is there news coming out that could impact the stock? Like, just something big that's going to be released, something that's going to have a major impact on the stock. Hey, I apologize. All right, so a chip interruption for the afternoon. No audio for this morning. No video around two, but I guess a little dog bark every now and then. Dogs are good for you unless they're barking. All right, so let's go back here. And yeah, I gave him a couple of bones, but this time he was not interested in all at all. So let's try this again. So in addition to news, what could move that market? What are traders looking at, right? Do you know any news, earnings, anything coming out about the company to know or be aware of? That would be part of the analysis. Also, is it profitable? Is it a profitable company? This is something that Marcus has mentioned. If you've been following the Coffee with Marcuses and the videos that he does, you could check the company, look at the profitability, specifically look at the net income for the last 2 quarters. I know in the past he shared how to do that using TradingView, so that would be something to consider. Is it a stock that has never made money, or company that's never made money, or is it a company that's moving in the right direction? Those are things to consider if you are at a maybe. Otherwise, if you're a no, that's where the checklist, that's a stop right there if it's a no. If it's a yes, let's proceed. And so let's go ahead and let's proceed. The next question to ask yourself is the stock moving sideways or higher? Right? And so when I'm trading the wheel, I'm perfectly fine with a stock that's moving sideways. That's the beauty of it. You could make money. Well, see, I consider the market to have five directions, right? You have a strong uptrend, an uptrend, sideways, downtrend, and a strong downtrend, right? And the uptrend and downtrend, you could even say minor downtrend, right? And minor uptrend. Well, the thing is, in three of those scenarios, the wheel's a really good fit. A minor downtrend, sideways, or an uptrend, and more, more so. I want to lean towards the sideways to the higher, but it could pull back a little bit. It could be a stock that's in a minor downtrend. I almost don't even want to say downtrend, but there could be a couple of days where it's dropped a little bit, where premiums are going up, and it's a solid company. You want to own it. You look at the chart, it looks great, and so that's a scenario that I'm not too concerned about. But even with that said, you could be profitable in 4 out of 5 of those directions. So in an uptrend, you can make money selling a put. If you really think the stock's going to take off, there's a better approach, either buy the stock or buy calls. But in an uptrend, you can make money on selling a put, the first step of the wheel. In a minor uptrend, you can make money on the stock going up and selling a put. In a sideways market, the third market direction, you can make money selling a put. And if there's a minor downtrend, you could make money selling a put, especially if the strike is at a good place. But also, if there's a minor downtrend, you might get a little bit of a pullback. You get assigned, and then the next week, it's your best trade of the month because you own stock after a little pullback. The stock's rallying, and you're able to make money on the calls and the stock. So the fifth scenario where you want to try to avoid, but this is why if you do get caught in this situation, you want to make sure it's a stock that you really want to own, is in a downtrend, right? So you want to avoid trading stocks that are in a downtrend, but by picking a good stock, you're better off, owning a stock that you want to own if that happens. So 1 out of 5 scenarios isn't ideal for the wheel. 4 out of 5 works just fine. That's why I love the wheel, because the odds are clearly in your favor. So is the stock moving sideways or higher? Yes, I'm going to proceed because that's perfect for the wheel. If no, then I want to take a closer look at support. Where is support? Where might buyers step in, right? If it's dropping a little bit, where might buyers step in based on past price and behavior of the market? But I really, really want to avoid a stock that is essentially in a free fall, right? That is not what you want to sell puts on. The premiums can be juicy, right? The premiums can be high because when there's fear in the market and when options traders are betting on a bigger move, you could collect high premiums, but that is not what I want to trade when I'm trading the wheel. So I'm looking for a stock that's moving sideways or higher, or if there is a little bit of a drop, making sure that there's strong support. Now, let's look at wait a minute. I have to show this one. I know for anybody joining late, you probably didn't hear Chip barking, but Larry Chip's pointing out that stock's a real dog. All right. Well played. Well played. All right. So let's talk about the next step on my checklist. Does the stock have irrational gains? So what the heck does this mean? Well, this is where you've probably heard Marcus say that he avoids crazy stocks, right? And meme stocks. If there's a stock that has irrational gains, if a stock's gone from $5 to $200, the problem is it could have irrational losses, right? And that stock could go from $200 right back down to $5. Trading the wheel, because you really have limited reward when you first start selling the puts, it doesn't make sense to trade a stock that could be all over the place like that, because you want to trade a stock that has a little more of a predictable behavior, right? And a good quality stock, if it's a good stock with predictable behavior, sure, anything can happen, but it's less likely to experience a significant drop, right? Quality stock that has, strong trends to the upside without, this irrational parabolic move, they're not likely to fall as fast as something that's just gone crazy. So this would apply to like the GME, AMC, CLOV, the meme stocks. So I mean that's what I want to avoid. If the stock has irrational gains, then I move on to better trades. If the stock has, gone up over time or is sideways, but just a more predictable, very systematic approach, then no, I'll go ahead and proceed. I'll go to the next step here. So another thing that's important for me is that the stock has weekly options. Now, this is where Marcus and I have, I wouldn't say we're the only traders that do it this way, but historically speaking, the wheel, if you have learned about the wheel basics or just, uh, cash secured puts or covered calls, generally speaking, investors have focused more on long-term options, right? Where you might go out a couple of months. And Marcus and I have found that it's hard to predict what the market's going to do in 6 months, let alone 6 weeks. But it's pretty easy to be on the right side of the market for the next 6 days, right? So that's where weekly options are so powerful. And I believe that there's two advantages here. One, if the stock's just behaving, you can make more money potentially by selling weekly options. Instead of selling a put that's 6 months out, or sorry, 6 weeks out, not 6 months, you could sell puts 6 times. And not only can you collect premium 6 times by going with weeklies, but you can adjust and accommodate market moves. So instead of being just stuck with a 6 week to expiration put that you've sold, every week, if necessary, you could say, start with the 40 strike put, and then if the stock drops a little bit, maybe you adjust to the 39. If it goes back to 40, you could sell the 40 and you collect a little more premium. So you have so much more flexibility with the weeklies. And I believe that if a stock's behaving, you could collect more money by selling weeklies. And if a stock isn't behaving or market conditions have changed, you can pivot and maneuver around those market conditions more effectively so you don't get stuck. So that's really important to me. The other part to it is, just like if you go to sell puts that are 6 weeks out, it's going to take a while for that premium generation to really take place. Sure, you get the premium. If you sell a put for $2, that's your $2. But if you're trying to close it for a profit, it's going to take some time before you can close it. You really can't look at 90% max profits like we do with our weeklies. You might look at a 50% gain, right? That might be something that you can achieve in 2-3 weeks if you sell a 6-week put. But then again, if you can sell, weekly options, you're probably going to do better. So anyway, for me, this is important. Does the stock have weekly options? If yes, then I'll go ahead and proceed. If no, I'm moving on to better trades. So another step here on my checklist. Does the stock have earnings coming up? If no, I'll go ahead and proceed. If yes, I'll move on to better trades or wait. And as a put seller, I do not want to sell a put where earnings will occur before the put's expiration. So if I'm selling a put for next Friday and earnings are on Wednesday, that's not a put I want to sell, because there will be some more premium. But once again, that premium is factoring, or it's based on the expectation that earnings and events on a specific date could potentially move the market. So there's uncertainty. And the challenge there is you're taking a limited reward trade. And if there's a big move that goes against you, then that's just not what you want for the wheel strategy. You want something that's a little more predictable, that isn't expected to make a big move. And yes, you can get bigger premium by selling puts with, that have earnings before the expiration. But for me, that's just too risky. I lose the advantage there as a put seller starting the wheel process. So for me, that's not something I want to do. I'll either move on to better trades, or I will wait until after earnings and see if after earnings the next put looks good. All right. So next, does the option premium give 30% annualized? And for those of you, I know we have a lot of PowerX optimizer users here. And I mean, for me, this is where the wheel scanner is just it really simplifies everything. But what I want to see is that on an annualized basis, if I'm collecting some premium, I'm getting 30% on that put, right? I might buy it back at 90% max profit, but I want to see a minimum of 30% to make it worthwhile. If yes, then I will proceed, but I want to go one step further. Because if the premium is greater than 40%, I really want to make sure that I check the stock for news, especially if it's not a stock that like I really, really know, because higher premiums with the wheel aren't necessarily better trades. And if it's higher, I'm going to show why in a minute. But that's a warning. That would be a reason to do a little research to find out what's going on. Why are the premiums so high? Are they too good to be true? Maybe. Maybe not. Maybe it's a solid trade and traders do expect a little more movement. So the premiums are higher, but it could be trials. That's not something that you want to have coming out, or earnings, like we said, or anything else big like that. If I can't get 30% annualized, then I'm going to move on to better trades. So if we go to the next step, is there irrational option premium? We talked about irrational stock behavior, but on the option side, there can be irrational premium as well. And this is kind of an extension of that 40%. Because if I see that the annualized return is greater than 40%, then I could do a little research and say, this is what I want to trade. If I see that all of the options, just huge premium, the implied volatility is huge, the ROIs are just off the chart, that is a huge warning for me. So if it's irrational, I'm going to move on to better trades. And I want to give two examples here, specifically one that happened this week. So this was the wheel scanner for, oh, you know what? I meant to take edit this week, and I took GME. No, no, no. I'm sorry. I did take edit. So I saw GME. I black flagged that on my scanner. I saw that at the top, and when I glanced at it, I was thinking I took the wrong screenshot. But on Monday, edit EDIT, a biotech stock. If you look at these option premiums here, you look that there is 1, 2, 3, 4, 5, 6 options. There were actually some more, but 6 in the view without sliding over. And the orange highlight, that's a warning with the PowerX optimizer. That last row, the annualized ROI. This annualized ROI. Actually, here I could do this. I could do a laser pointer. So this last row here, annualized ROI. On Monday, if we sold Friday's 40 strike, which is 30% below the market on that day, 46% annualized. Pretty good, right? And if there was a bunch of green in one of these, that might not be as much of a concern. But then we look, okay, the 45 strike, 22% below the current market, 146% annualized. The 50 strike for this Friday, 321% annualized. The 52 strike, which is still 10% below the market on that day, for this Friday, 393% annualized. These are silly numbers. These are irrational option prices. So when I see this is 100% a clear no. I stay completely away from this. And if we look at the chart here, I guess I need to get rid of my laser pen or pointer. If we look at the chart, this is what happened. So on Monday, when it was trading at 57 bucks, you were looking at it, maybe thinking, oh, this can't fall by that much. And then today it was trading at 40 bucks, right? So that is a huge drop. Now, if you were just drawn in and you weren't worried about owning the stock, you didn't do any research, you just saw that there was huge premium here, it could have been easy to step into this trap. But if you saw that as a warning and you realize that in no way, this is just too crazy, then you wouldn't want to trade it. And there's no way I would have touched this. And it fell, now it's at 40. So, I mean, this is unfortunate for someone who isn't really following the steps that we outlined for the wheel. But this is why I have it as one of my checklists, or one of my steps in the checklist. All right. So let's go back a slide. So here, this was Sava. This was on August 25th. Another one here. If I zoom in a little bit, you see that Sava, it was trading at 85.27 on the day that I took the screenshot. The 50 strike, 41% below the current market, had a 73% annualized return. The 55 strike is 66%. You get the idea here. So 168% on the 65 strike, still 24% below the market. So what happens here? Well, the market just takes out all of those strikes. That's why, for me, option premium isn't everything. Yes, I want to have a minimum for the trade to make sense, but if it has irrational options pricing, then I'm just going to stay away. It's not something that I want to trade. All right. So the next step, is there good premium for the current week? Yes, I'll proceed. No, I'll see if there are other A+ trades before proceeding. So I like to sell option premium for the current week, especially if there are a couple of days to go before expiration, because that's when you're going to get the best time decay. And as a dollar value, sure, going further out will bring in more premium as a dollar amount. But when you look at the premium per day, the premium per day is often higher, where you can collect premium for maybe 3 days and then sell the next week and get 2 premium collections for the price of one, kind of. So I'm always interested in going for the current week. But if it's a real solid trade, I really like it, and I don't see anything else, then I'll see if there are any A+ trades. If not, I'll go ahead and I might consider going a second week out. But I'm always starting with the first week. Here, important concept. Is the strike at or below support? If yes, I'll proceed. If no, I'll move on to better trades. So I want to make sure that if I'm selling a put and I'm selling a strike, I want to make sure that that strike is at or below a support level when I'm looking back on a chart. And I'll show some visuals here when we look at open trades that I'm in. But that's something that I don't want to just sell a put at a strike where I get a sign and then the stock drops $5 going right down to support. I want to see that there's some support there for 2 reasons. One, it's less likely that we'll get assigned. And if we do get assigned, it's more likely that the stock will hold at that level, right? Which means that it's easier to sell calls and it's easier to make money on the stock if and when assigned. All right. And then is there nice premium on the call side? So this is the last step for me, because there are some times where a good quality stock pops up and I would love to trade it. Oh gosh, what was it this week? I think it was a bank. It might have been, I can't remember now, but I'm pretty sure it was a bank that popped up on Monday or Tuesday, and it was really just a good trade. And if I was just thinking, it's kind of like chess, play a couple of moves ahead, right? If I was just thinking about Friday and where that strike was and where it would expire, I would have taken it. But seeing that the calls really didn't have, if I do get assigned, the call premium was so low that if it moved against me, it would be difficult to really manage that trade and defend it in the collect premium, which is the second step of the wheel, or the third step. If you get assigned on step 2 and the third step's, sell calls against the stock that you own. So this would be the other thing. So sometimes you've just been trading a stock for so much, or it's popped up on the radar. You just know that it has good premium. But if something just out of the blue pops up and you're thinking, wow, this is a great company, it's a great chart, it's a great stock, makes sense to double check the premium on the call side, because it could be that because of current market movement, premiums have jumped a little bit, but there just isn't a lot of premium in the further expirations out. So to recap this list, so this is my 10 steps for the best wheel checklist. Step 1, do I want to own the stock? Step 2, is the stock moving sideways or higher? Step 3, does the stock have irrational gains? Step 4, does the stock have weekly options? Step 5, does the stock have earnings coming up? And step 6 we already did that one. Step 6, does the option have irrational premium? Step 7, does the option give 30% annualized? Step 8, is there premium for the current week? Step 9, is the strike at or below support? And step 10, is there call premium if assigned? So I'll just take a look at a few questions, and then I'm going to share my trades, and we'll take a closer look at a few things that I think will kind of help put all of this into perspective. And this is where Webby Wunda says, that's me stuck in forward, no premium on the call side. Now, I think that's a great example. And so just taking it one step further, this is why I hope this checklist helps. Seeing that there is good premium on the call side makes it easier when you do get assigned. A few people asking where Marcus is. Marcus wasn't available today, and we decided last time we got together and met that instead of just canceling, I'm going to do Coffee with Mark instead. So I hope you're enjoying it. All right, let's see here. So Earl, when calculating per position allocation, do you calculate that based on the cash balance or marginable purchasing power? Well, if you're using margin to determine your position sizes, then I would do it based on the position sizes that you're using. So if you're not using margin, then you just use cash. But if you are using margin, because there's two parts where you kind of have margin. One, if you have a margin account, you have stock margin, right? So a typical margin account, you have 2-to-1 extra buying power. You have $100,000 in cash. You have $200,000 in margin. Now it's not margin, but many traders will confuse it with margin, and it's very similar. But that's where if you have the approval to sell naked puts, your broker will usually require only 20% of the full buying power required for that trade when you go to sell a naked put. So some traders assume that's margin, but it's not margin because your broker doesn't give you money to borrow, or they don't let you borrow options, right? They're just saying that, okay, when you have more experience and you have these higher approval levels, we'll give you a little more flexibility so you don't have to set aside as much money in buying power required to put that trade on. So technically not margin, but the two kind of go hand in hand. But if I'm basing my full positions, right? Full positions where if it's $100,000 and $200,000 in margin, you're trading 5 positions of $40,000 a pop. Your broker might require only $5,000 to sell a put on that $40,000 position. But if I'm basing my positions on margin, then that ROI is based on that too. All right, Kathy, woohoo! PXO in the wheel. Love being in masterminds. Wonderful, great having you. Yeah, it's a lot of fun. We had a good call this morning, even though I just couldn't figure out YouTube. Yeah, and I mean, David, happened with me before the mastermind, and GSX now go to. It's now at $2, $3 a share when it was at 58, or that's where you were assigned. I mean, that was the thing. If you looked at the premiums were a warning, right? So I hope that this checklist helps other traders avoid that situation. Junior says, I barely escaped edit before the rollover last week. Guilty of chasing greedy option premiums. It's common and it's tempting, right? Sometimes in the mastermind group, it's all about deselection. We're trying to talk ourselves out of trades. And that I think is okay. Remember that being on the sidelines is a position. So don't get caught up in just the premium. Just say, would I be willing to own the stock for 3 months? And if you'd have a hard time owning it for 3 days, don't sell puts on that stock. All right. Let's see here. Tony, you're more than welcome to leave. No, I'm not trying to be a dick, but if you came from Marcus and he's not here, and you're not enjoying it, feel free to spend your time doing something else. We weren't trying to bait and switch; it just ended up that way. All right, so let's look at trades. Let's look at trades. Perfect. So let me share my charts here, and let me also take off that. Well, let's start with a share. Do one thing at a time. So we'll go to the chart. Perfect. And I want to, there we go. I'm going to hide that. Perfect. Perfect. So let's talk about open positions here. And ARKK, this is a trade that Marcus and I both traded. So we saw this. I think it was on Monday. We put this on, maybe Tuesday. But ARKK, and I made a note here because Marcus and I, we both sold the 105 put expiring this Friday. And when we sold it, so ARK, it looked like it had some decent support right around here. And at the beginning, when we sold it, it was kind of testing this level. And when we look back at a chart, there was some support, but we were a little worried what happens if it falls through that support level, right? So if short-term support didn't hold, we saw this, and it looks like going back a little bit. The 100 to 105 range could act as support. So we felt this was far enough that even if we dropped a little bit, we'd be okay at 105. Possibly letting the option expire worthless and just collecting the premium, or B, if we do get assigned, the chances of, okay, it trading around 105 or maybe even coming down to 100, there's some nice premiums in those calls. And so, like, even if 100 round number support holds up, like this one should be pretty easy to defend. So we sold the 105 put. We liked it. So far, it's working okay. Today closing at 110.53, even though the markets were down today. Look at that. A little bit of a sell-off into the close here, everything turning negative. So NASDAQ was positive when we first started. Let me get a sip of my coffee. All right. So, yeah, I mean, the selling continued, but ARK looking pretty good. Okay, so another trade that both Marcus and I are in, U.S. Steel. So U.S. Steel, here we see, let me go ahead and reset the chart. U.S. Steel, we've traded this a couple of times, made some nice money on this. Now, we avoid it when it gets to these upper ranges, but when we see that it comes back to these like support levels, so we traded it here, let it go a little bit, waited for the pullback and traded it again a couple of times. I think we did it last week and then this week. Don't quote me on that, but either way, this week we sold the October 1st, 21st put, and looking good. Looking good. I mean, it's just kind of stuck around 22. But even if we get assigned, I mean, if there's a drop tomorrow, we get assigned 21. Okay. This works for me. So this stock, nice support, nice premium, everything looks good. Not a crazy stock, not going wild, nice gradual run up, nice sideways move with support. So this is just a great wheel candidate in my opinion. Okay. So GDXJ is a trade that I have on that Marcus does not. And so this is another one. I've traded this name a bunch of times. And so I want to admit that it was probably because I'm familiar with this one that it tipped it into the yes category, because I'm familiar with it. I've made money on it. It's just something that I found that even when it kind of found some downside here, it has a tendency to bounce and trade in these ranges where we could still, make some money on it. I sold the 39 put. I was assigned last week. So it closed at 38.93, a couple pennies below 39. I was assigned. And on Monday, it opened higher. Because we were trading right at the support level, instead of selling a a higher call. I went with the 39 call, collected 60 cents, which for a 39 stock is just awesome premium. And it has dropped a little bit. It's trading below that 39. I put in an order to close my 60 or the 39 call that I sold against the shares I own at 90% max profit. To be honest, I don't know if it filled. I haven't checked since about 15 minutes before this video. So this one, we'll see if I didn't get filled on the 90% max profit, I will take that order off and I'll let it expire tomorrow. Tomorrow, I'll look at it. If it gets called away, great. If it closes below 39 and I get to sell calls again next week, great. I could check and see what the premium looks like for next week if I'm in or out of the 39 call, see if a roll makes sense. But here, I own shares at 39, collected some nice premium on this one. This is one I am in, but Marcus is not. Now, JWN, Marcus and I are both in. We were assigned at 30. We collected some money on the put side. We collected some money on the call side. We recently sold the 30 call, and it was flirting with 30 all week until today. Like I said, I believe that Bed Bath & Beyond was kind of that distress signal for retailers, because it seemed like everybody else just kind of picked up and sold off too. I hope that it's just an overreaction here. It does look like it's finding some support at these lows, but hopefully it's a bit of an overreaction and we could start selling calls again. Otherwise, this is one where I'm okay owning it, and if I need to fly a rescue mission on it, then that's fine. Again, make sure it's a stock that you want to own. And if you do get a drop that is a little unexpected where support breaks, be okay owning it for a couple months. I am. All right. So LVS, another position. I mean, this one, we've talked about it. Today, I sold 35 puts as a partial rescue mission. Those were up last I looked, but I wouldn't mind getting assigned at 35. Bring that average cost down. So that's the point with a rescue mission. So if it's a stock that you're willing to own, but then markets tell you that it's dropping instead of going sideways or higher than you thought, be patient. If we were aggressively selling puts, flying rescue missions here, we'd run out of money and be screwed. Instead, we waited for this drop, waited for some support. We sold the 39 put, I believe, and then the 37 put, and then today the 35, or maybe it was 37, 36, 35. But either way, we've sold puts now that it's fallen. So now we're collecting money on the put side, but I would be fine getting assigned at 35, bringing that average share price down so I could sell calls, start selling calls again without it having to make a move all the way up here. So being able to manage the trade, knowing what to do there, that's a big advantage. I wouldn't be surprised if we start to see some upside to LVS it might not be the next, week or two, maybe the next month or two. But I do think that the concerns there are a little overdone. It's not that they're not valid, but I think that the reaction is a little overdone. We'll see. Let's look at Ride. I know that someone asked about this one. And on this one, so this was crazy. So there's news today that Ride, they are in talks to sell their plants, their manufacturing facility in Ohio that they purchased from GM 2 years ago. And that news sent this stock almost up to $9. So it was up big today. It's pulled back and closed just below $8 a share, up 8.5% today while the market's down. I think that's a positive. That could be part of the pullback, just the overall market sentiment and the indices being down. Maybe not a huge impact, but I would almost guarantee that if the markets were higher, there would be a little more optimism on this one. It sounds like when I looked into it, I didn't look into the full commentary or all the information on the potential deal, but it sounds like it's kind of a win-win for everybody, where Ride gets a huge infusion of cash, which will help them. They say that they're going to be producing. I want to say it was end of the month or beginning. That's where I don't know the exact details. I'm sure someone could comment and share exactly what's going on. but they're focused on production and they have cash flow concerns. And the selling of the plant it's huge. I mean, this place is absolutely huge. It would bring in the cash flow that they need, really help them out there with production. And it sounds like the other company, which I don't know too much about, it would be a win-win for them too. So it sounded like it was positive news. The traders reacted to it in a positive way, but it did come well off of session highs. All right. So there are two stocks that Marcus has puts on, and I'll share those. The first one is AMAT, Applied Materials. So Marcus sold the 126 put expiring Friday. So strong support here. He put this on yesterday. So Marcus has sold this one. Another one that Marcus put on that I did not is XME. So the metals and mining ETF. He sold the 40 put expiring Friday. And so that one's looking great. So everything looking pretty good. We might have some work to do with our open positions, but I mean, it's a lot easier and more comfortable when you're in a trade that you're okay owning, right? You're okay owning the stock. And then it's just about managing the trade and then getting a nice turn and a nice rally with patience and profiting from that. All right. Yeah. Paul says, so this is the company that is potentially buying the plant from or the manufacturing facility from Ride or Lordstown Motors, Foxconn. They make iPhones and it's partnered with Fisker. That works. So Dave says, how will cash flow help Ride if they have no factory to build trucks? So, I mean, this is where I don't know the exact specifics, but I know this place is huge. So my guess is that they would have a leasing, arrangement where they are still able to use the facility. But it's my understanding that this place has so much room. They were looking to bring in other companies to use part of the space. And what they might have done is sold the facility to someone who has more cash to get that cash, but the details might be coming up with a arrangement where they have a long-term lease available. All right. Okay. So, and I mean, this is where I don't know on this. Foxconn is a contract manufacturer that builds all of Apple's products. Sound like the right warehouse sales way to give up and cash out. But see, I would imagine that the lease back is the whole potential here because they've been talking about production and they need money. That's right. And it sounds like Foxconn has a position, or either they've entered the EV space or they are entering the EV space. So again, we might have more information coming out there. But when I first looked at things today, I didn't see anything that stood out as like a huge red flag, like this is the end of Ride. It seemed like more of a strategic decision to get cash. Okay, so there's a question about selling calls below the cost basis when there is no premium at the strike price. So Marcus and I, we begin by looking to sell calls 1 to 2 strikes, typically above the assignment price. And if we can't do that, then we'll consider selling calls at the assignment price. And early on in the position, first week we're assigned, 2 weeks we're assigned. We're normally not trying to aggressively, figure out how to get out of the trade. And we're a little more patient, seeing if this can stabilize. We get a nice pop because some of the biggest profits come from that scenario. You get assigned, the stock's pulled back, then the stock starts to rally. You sell calls, you make money on the calls, you make money on the stock. But if you've been in the trade for a little while, you can either wait for the stock to rally so you could start selling calls again, or you could wait to potentially fly a rescue mission, or you could sell calls below your assignment price. The only reason I would consider that is if I was really looking to bail on the trade, right? So most of the time, like right now, I really don't feel like I need to sell calls below the assignment price on LVS. I believe that by managing the trade, by flying a rescue mission, we still have 2/3 to go on the rescue mission. We started with 1/3. We were assigned. We're now dealing with the second third on the rescue mission, and we still have another third to go. So I believe that by having some patience, giving the trade time, I can manage it to profitability where I don't have to sell calls below the strike or the assignment price. And if you want to sell calls just to collect something to lower your break even, just accept that anytime you sell a call, you have an obligation to sell shares. So it is possible that you think, hey, I'm getting some good premium here. The stock's not going to go up to that price. And then it does. So just if you do that, be comfortable with selling your shares at that call strike and recognize that you could be taking a loss on the trade. If that's your intention or you're okay with it, then it's something to consider. Okay. All right. So, hey, let me tackle this last question, and then we've been running almost an hour here. So, we'll go ahead and wrap things up. David says, how far out do you go in time to sell a call after being assigned? I'm really looking 1 to 2 weeks. So, just like on the put side, I would rather go 1 to 2 weeks out because I don't want to be stuck where I have a difficult time controlling things, right? If we go out 1 to 2 weeks, then if the stock's rallying but doesn't get to that call strike, then there's a chance that we can just continue to adjust where we're making more money on the calls that we're selling. We could even sell higher strikes if we want to. And if the stock has dropped a little bit, there's a chance we could buy that call back and reassess the trade. A day or two later, stock pops, we could even sell the same call or 1 week out. Where if we go too far out, then you don't have that flexibility. And if the stock drops, chances are because there's still time value in the option, you're not able to get out of the call at a good price. You might be looking at 50% exits rather than 90. But if the stock's dropping and it's short term, it's easier to close that out. All right. All right. Well, hey, thanks for joining me and Chip today with Coffee with Mark. I hope you enjoyed the call. I hope you enjoyed the session. Marcus, he does have a full schedule and he always tries to show to these sessions on Monday and Thursday, but I'll be subbing for him if he cannot make it. I hope you enjoyed today. We'll see you all next time and see you tomorrow morning for our stock market update. Till then, happy trading, everybody.